Traditional ways for VCs. Among the three ways to invest in private capital are buyouts, growth funds, and venture capital. Venture capital is a form of private equity that finances startup companies that are expected to have exponential return and high growth potential. And I want to pause there because, man, bro, the whole reason that we all came over to this space is because it's really different than anything with Wall Street or stocks. The growth over here is ridiculous compared to percentage wise, Austin.
Well, it's not only the growth is not only it's high growth potential, but also that high growth potential is to a normal citizen, to the population of the world. Before with VCs, to get access to those type of deals, to get access to be one of the first investors in Facebook or Google or Netflix, like the ones that you're showing just in the previous slides.
Yeah.
You had to be a part of a special group of people to even get word of those opportunities. So that's what, with DAOs or with crypto, what's awesome is that it's opened up those opportunities to everybody.
Mm-hmm.
Now, just as a society, we got to be more educated on risk reward, on the risks that we are taking with our capital.
Yep. I remember when it was like the first year when we were starting, there was a guy in our group. I really haven't seen him around a lot, but he was an accountant for an oil company and oil exploration. Dude, there's no way that we could ever be kind of part of that stuff. You need big money. You need billions of dollars for oil exploration, man. But there was starting to be some ideas and things knocked around over there where they were talking about a DAO like this or something maybe different where you're tokenizing that thing where it can kind of be spread out of that. But oil exploration, I know it's not environmentally whatever what people would think, but I'm just talking about the ideas. It was always where you're kind of locked out of that kind of stuff. But what you just hit the nail on the head is that kind of stuff, man, is so many more people are going to be able to be a part of this. And that's really what's cool. Right. And talking about, I want to go back to this VC fund ranges, normal is 15 to 27%, a high premium compared to, what just if you're doing S&P 500 companies, 9.9 to 10% returns the last 10 years. But again, you just got to think of the exponential growth. We're only, we were at a $3 trillion market cap with crypto. Now we dropped under $1 trillion. Man, bro, just think of the growth that's about to happen here. And when you're going to be able to do, some of these type of startups, man, you're going to get in. And that's what this chart here, and I can't blow it up. Hopefully you can see it. But if you look at the global venture dollar volume, 2012 to 2021, you can see it's really starting to grow, man. But this is really going to start taking off because this red orange or whatever, this technology growth, it's really starting to expand. But I think this is going to come up to this late stage where that's where most VCs jump in with some of these companies. But technology, I think that's a big one, man. Obviously, that's what we're in: blockchain, DAOs, crypto, any of that stuff with NFTs. Big technology move, and I think I'm just kind of pumped that we have this vision of that this DAO that we're in with NFTs as the identifier. Well, we're a Web3 VC, man, and that $1 billion fund is going to be at our disposal when it matures, right? It's something that we don't. It would be ridiculous to go and tap into that now because that's not the price. That's very, very undervalued. We're going to go and make this $1 billion fund, right?
Absolutely.